Market forces have not been kind to Australia's biggest investment bank, Macquarie Group. The company is sticking to its forecast that annual profit will be higher than the previous year, but the market upheaval has taken a heavy toll on some parts of the business. As the share price slipped close to its lowest level in more than 2 years, Chief Executive Nicholas Moore assured shareholders at the AGM that Macquarie is doing better than its competitors and could withstand serious market turmoil. Here's Philip Lasker.
Production is down at the millionaire's factory.
The first quarter has been marked by some pretty serious events that really is sapping confidence in the world. It's sapping confidence from the point of view of retail investors. It's sapping confidence from the point of view of institutional investors, from hedge fund investors. All the counterparties we deal with, basically, we're experiencing a lack of confidence.
So Macquarie confirmed speculation of a weaker first half profit for the 6 months to September and scrapped its profit growth forecast for the fixed income, currency and commodities division, a division accounting for 70% of last year's trading income. But it stepped up its expectations for the funds management division.
The market-facing businesses have suffered with the weak market conditions. But against that, we've got our annuity-style businesses that have continued to grow over the period. So this is our funds management group, our corporate and asset finance group.
Macquarie is still expecting to improve on last year's full-year profit of $956 million if the markets don't get significantly worse. But with the debt ceiling negotiations still deadlocked in the United States, an unprecedented default by the US is still on the cards.
We can't believe it's a good thing. We think it'll be a bad thing, obviously, and the implication to the business will be bad. I mean, I think, put very simply, it's again like where we've been in over the last few years. It'll be a place we've never been before. So until we get there, we don't know.
That simple and frank observation didn't help Macquarie's share price, which tumbled more than 4%. Nicholas Moore assured shareholders at the AGM that the bank was well placed to survive a market meltdown without a plan B.
I would like something a little bit more of a catastrophe plan, given that it's not just wild-eyed enthusiasm that's using the word catastrophe and major economic crisis. It's more of a foreseeable reality now, even than 4 years ago.
With return on equity falling from 26% 5 years ago to below 10% now, the Australian Shareholders Association called on Nicholas Moore to confirm reports Macquarie was not covering its cost of capital. Mr Moore dismissed the measure as theoretical.
It's profitless prosperity. The company is going out backwards. Now, nobody's suggesting that Macquarie is going out backwards because they've suggested that the return on equity will improve. But were it not to improve, shareholders would need to be very concerned.
But shareholders weren't concerned enough to reject the new pay arrangements, which could see Chief Executive Nicholas Moore walk away with $2.5 million worth of performance shares.